I'm buying this one stock to get rich without getting lucky. Broadcom is making big moves. They're planning a 10-for-1 stock split, and their stock has surged by more than 50% just this year. When you see growth like that, you might wonder, could Broadcom become the next NVIDIA, or have they already had their best days? This video will explore what Broadcom does and how it competes with NVIDIA. We'll also look at its strengths compared to other semiconductor firms. We'll review their recent earnings call and the upcoming 10-for-1 stock split. Lastly, we'll consider whether Broadcom stock remains a good investment despite its 50% rise this year. Whether you're familiar with Broadcom or not, knowing its position in the market is important, especially if you've invested in it. Broadcom is one of the biggest companies in the S&P 500, right after Eli Lilly and Warren Buffett's Berkshire Hathaway. It's also among the top companies in the NASDAQ 100, ranking higher than Meta Platforms' Tesla and Netflix. In the AI chip industry, Broadcom is second only to NVIDIA. According to Broadcom's CEO, Hock Tan, almost all internet traffic uses at least one Broadcom chip. Broadcom is a leader in global network infrastructure because that's their primary focus. They operate in two main areas: semiconductor solutions, making up about 58% of their revenue, and infrastructure software, which accounts for the remaining 42%. Let's break it down. Broadcom's semiconductor solutions focus on wireless networking, network interface cards, high-performance switches, and custom application-specific integrated circuits, ASICs. These ASICs are crucial for investors to understand because they differ from NVIDIA's GPUs. In simple terms, ASIC chips offer better performance per dollar, but are less versatile because they're designed for specific tasks. They excel in particular workloads like AI tasks, but they're not as flexible as general-purpose chips such as CPUs or GPUs. Broadcom sells these ASIC chips mainly to large-scale data centers that can use them effectively, balancing out the high costs of designing and manufacturing them. Stacy Raskin, a senior semiconductor analyst at Bernstein, explained why Broadcom might be a better investment than AMD. He mentioned that while AMD is the second choice for GPUs after NVIDIA, Broadcom and other ASIC companies could be more reliable alternatives for the long term. Raskin pointed out that Broadcom has a strong AI business, making it the second best company in the AI space after NVIDIA. Unlike AMD, which hasn't benefited much from AI, Broadcom's AI segment is strong enough to offset weaknesses in its older networking business. He also mentions that Broadcom has a promising future with its software businesses and believes the stock is undervalued. In short, Broadcom's strong AI business and potential for software growth make it a wiser investment than AMD. Broadcom's data center chips are second only to NVIDIA's, offering a key advantage of diversification. Holding both NVIDIA and Broadcom stock means gaining exposure to two types of AI accelerators, GPUs and ASICs. Broadcom has helped design every generation of Google's tensor processing units, TPUs, which Google uses for large AI models like Gemini. This includes the 6th-generation TPU announced recently at Google I/O and the upcoming 3-nanometer TPUs in development for Google and Meta platforms. Google and Meta are expected to generate over $9 billion in AI chip sales for Broadcom this year, almost 2.5 times more than last year, and about 50% more than AMD's expected AI chip sales for the same period. Broadcom also creates high-performance switches for AI data centers. Their custom Jericho 3 AI chips can be linked to support large GPU clusters. And there's even more they offer beyond this. Broadcom was the first company to launch a combo chip for mobile phones in 2007, combining Wi-Fi, Bluetooth, and FM radio components into one chip for the first iPhones. In 2019, they completed the industry's first end-to-end 5G switching portfolio, moving almost all radio and fixed-line traffic onto Ethernet. This is why nearly all internet traffic, including over 60% from mobile devices, touches at least one Broadcom chip. Today, Broadcom is still the main supplier of Apple's 5G and Wi-Fi chips. Last year, Apple was Broadcom's largest customer, accounting for about 20% of their total revenue. Unlike their shift to in-house chips for Intel's processors, Apple has strengthened its partnership with Broadcom. The iPhone 17, expected in 2025, will likely use Broadcom's chips. Most of Broadcom's semiconductor solutions are designed for enterprises with wired or wireless Ethernet-based infrastructures, the current industry standard. Major players like Amazon Web Services, Microsoft Azure, and Google Cloud have their own lines of AI chips for Ethernet-based racks. NVIDIA is introducing its Spectrum X Ethernet networking solutions to capture more of the data center networking market. So, should Broadcom be worried about NVIDIA? When asked about competing with NVIDIA, Broadcom CEO Hock Tan explained that Broadcom focuses on different areas. They don't directly compete with NVIDIA in accelerators, where NVIDIA is strong. Instead, Broadcom designs custom chips for companies like Google, Microsoft, or Amazon when they need specialized AI solutions on a large scale. These chips don't directly compete with NVIDIA's GPUs, but with AMD's and Intel's CPUs. Broadcom's extensive experience in networking, especially Ethernet, over the past 25 years gives them a strong foundation in AI networking. This fits well with their expertise in Ethernet technology, making Broadcom a key player in this field. Even in networking, Broadcom recognizes that GPUs are the preferred choice for AI computing in data centers. They understand the need for tightly integrated computing platforms. Broadcom's networking solutions aim to support and complement GPUs by connecting large GPU clusters rather than competing directly with NVIDIA. NVIDIA's Spectrum X Ethernet solutions might be used for specific AI compute clusters, while Broadcom's networking solutions connect everything else as they currently do. It's important to note that most internet traffic today doesn't involve generative AI. Besides networking, 42% of Broadcom's revenue comes from its infrastructure software segment. In 2018, they bought CA Technologies, which provides IT management software for automating tasks, managing projects, and handling test data. The following year, Broadcom acquired Symantec, a cybersecurity platform that defends computers, laptops, and servers from threats like hackers and viruses. Then, in November 2023, Broadcom moved significantly by acquiring VMware for $69 billion. VMware allows companies to set up virtual machines that can handle tasks like isolating sensitive data, backing up data when main machines fail, or combining resources from multiple servers for complex jobs that need more computing power. Broadcom's strategy with these software purchases, such as VMware and Symantec, focuses on supporting large data centers to run smoothly, grow, and protect their equipment and networks. VMware dominates virtualization with about 60% of the market, while Symantec holds a strong position in protecting Windows computers from malware, with over 75% market share. Interestingly, Broadcom was acquired by Avago Technologies in 2015 for $37 billion, marking the largest merger in semiconductor history. Avago specializes in wireless networking parts and custom chips for smartphones and business networks, so Broadcom's stock ticker symbol is AVGO. Let's dive into Broadcom's latest earnings and competitive advantages to assess if their stock is a good buy after its significant increase and upcoming 10-for-1 stock split. Broadcom achieved record revenues of $12.5 billion for the quarter, a remarkable 43% increase from the previous year. Their gross profits also grew substantially, reaching $7.83 billion, up 28% year-over-year, resulting in gross margins exceeding 61%. This was largely driven by their strong presence in data center networking and strategic software acquisitions. For instance, including VMware for an entire quarter doubled Broadcom's overall infrastructure software revenues. One standout was Broadcom's AI revenue, soaring an impressive 280% year-over-year to $3.1 billion for the quarter. This growth compensated for declines in non-AI semiconductor sales to enterprises and telecom companies. Interestingly, Broadcom forecasts AI revenues to reach $11 billion this year, a figure they're likely to surpass even if AI growth levels off for the remainder of the year. Let's highlight two major trends in Broadcom's earnings. Firstly, while their traditional businesses in non-AI networking and semiconductor sales are struggling, this is more than offset by their AI revenues growing by triple digits. This mirrors NVIDIA's experience in 2022 when consumer GPU sales dropped, but AI revenues surged. I anticipate Broadcom will shift towards AI, though perhaps not as dramatically as Nvidia, potentially increasing AI revenues from 10% to around 30% of their total revenues in the coming quarters. Secondly, unlike many other chip companies, Broadcom has a diversified portfolio of hardware and software solutions. This not only boosts their profit margins, but also provides flexibility to enter new markets or compensate for weaknesses in existing ones, as demonstrated in their recent quarterly results. The global artificial intelligence market is projected to grow 12-fold over the next 8 years, with a compound annual growth rate of nearly 37%. Broadcom's blend of hardware, software, and services positions them well to capitalize on this expansive growth opportunity. Now that we've covered Broadcom's business, its key competitive advantages in the semiconductor industry, and an overview of its recent earnings, the final question remains. Is Broadcom one of the best stocks to buy, considering its already impressive 50% increase since the beginning of the year? Broadcom's upcoming stock split on July 12th could benefit investors. After the split, each shareholder will possess 10 times more shares, each valued at 1/10 of the current price. Companies that undergo stock splits often experience a subsequent 25% rise in stock price over the next year, compared to the S&P 500's typical 12% increase. This is largely due to many international brokers not allowing fractional share purchases, making lower-priced shares more accessible. Moreover, Broadcom might find itself included in the Dow Jones Industrial Average, which tracks 30 major U.S. companies like Microsoft and Apple based on their stock prices. The stock split could make Broadcom a more suitable candidate for this index. Broadcom has consistently increased its dividend for the past 12 years, currently yielding over 1%. They distribute half of their free cash flow as dividends and allocate the remainder to stock buybacks or acquisitions. Last year alone, Broadcom spent approximately $7 billion on stock buybacks. Considering these factors, the potential benefits of the split, a growing dividend, and strategic financial management, Broadcom appears to be a promising tech stock for long-term investment. Broadcom isn't trying to copy Nvidia's success in AI, and that's a good thing. They focus on AI with AS6 chips instead of GPUs, prefer Ethernet over InfiniBand, and emphasize software for AI infrastructure and hardware. Investing in Broadcom and Nvidia lets you benefit from different approaches to AI growth. Understanding these differences is important when deciding where to invest in tech stocks.